Welcome everyone, this is John Sheely at Traders Country Club. I'm going to give you an indication of the type of research that we do at Traders Country Club, but of course I need to give some risk disclosures. There's a very high degree of risk involving all type of trading. This includes stocks, options, futures, and forex trading. Trading is not suitable for all investors, and past results are not necessarily indicative of future returns. Also, I'm showing the hypothetical results disclaimer. We're going to show you some hypothetical results in this video, so take a look at the hypothetical results disclaimer that we have here as well as on our website. And there is a reason that we use special indicators on our Traders Country Club website. I'm going to give you an example. Here's the spider, and you've probably heard of the RSI, Relative Strength Indicator. And basically you're supposed to be being told that if the market gets very high on the RSI, either 70, 75, or 80, that the market is, quote, overbought. Well, that implies that the market actually is going to fall, doesn't it? So I'm giving you an example here. We've had a rally, and what I've done is I created a strategy that if the RSI is too high, we'll go ahead and go short. We'll put in a stop loss and we'll put a profit target, and this will give us an idea if the market really does tend to fall, or if the market is really oversold, then we'll look for buys. And the whole idea is based upon the books. The RSI indicates that prices will begin to fall because it's, quote, overbought. And you can see an example here is that here we've had a strategy of which we've gone short if the RSI is too high, but in this particular case it didn't fall very far, did it? And instead we actually, if we used a stop loss, then actually we would have lost some money on this particular trade just because it was a very high RSI. But you can see we actually had another overbought condition here in July, and in this particular case the price fell down, and what I've done is we're using stop losses based upon average true range, and you can see therefore we've had a winner and a loser. But our research doesn't go 1 year or just basically a few years. We go back for decades to see whether or not the price really does fall based upon RSI. This is the difference of what we do at Traders Country Club. Let me show you the last 15 years on the research on whether or not the market tends to go higher or lower based upon oversold or overbought readings. What you're looking at for the spider, now what you're looking for here is the performance report that we can use for TradeStation. What you're looking at is all those negatives. That means if I actually bought the market because the market was, quote, oversold and went long and then put a stop loss, guess what? You ended up losing money by trying to buy the market because it is, quote, oversold. The same reason, if I took short trades, for example, we did in the chart before, if I actually took a short position based upon an overbought reading of RSI, I actually lost money as well. So in other words, do you want to put a position on based upon RSI, based upon the RSI readings of overbought or oversold, whether or not it's 70 or 30 or 80 and 20? The answer is no. Well, what you're seeing is the type of research that we do for all of our indicators and our strategy. We don't guess. We go back decades to determine whether or not they are positive or negative in regards to improving performance. Now let's take a look at Apple for the last 15 years. Now you're going to look at this and go, wait a second, I was able to make some money, in fact some very good money on a long trade looking at an oversold market for Apple. But if I tried to go short on Apple, I actually lost money. Listen, the RSI is not the reason that you bought and made money buying Apple. Why did you make money based upon an oversold RSI? It's because that Apple in the last 15 years has gone up higher and higher and higher. So in other words, of course, if you have a dominant bullish trend going up for 15 years, performance would have been improving no matter what you did. Using RSI, anything else that was oversold was going to work. So in other words, the RSI wasn't making you money. It was the fact that the market was so strong for the last 15 years. Let me show you several examples as well. Here's the crude oil for the last 15 years. Now here's an example that the market is, quote, oversold, and therefore you could look for trying to buy the market because you think, well, if it's oversold, it's going to bounce. Instead, it gets lower and lower. Let's take a look at the performance for the last 15 years using RSI, and you're looking at it. Now, granted, you're only looking at basically 100 contracts. Just if you're looking at 10, then just deserve it by or divide it by 10. But look at this. Long trades, short trades, it's getting killed. All because you should not use the RSI as an indicator. It's useless, because if you try to use it based upon its normal process of watching whether or not the market's overbought or oversold based upon the RSI readings, too high or too low, your performance will not improve. You are going to lose money using the RSI. Why? Because this is what the statistics show you. This kind of work that you see here is the kind of work that we do at Traders Country Club. I want you to do this. I want you to go to my competitor, and they're going to talk about this indicator, and I got this other thing that you can do in regards to strategy. If they don't show the performance in regards to the TradeStation strategy report, and that if they're not showing you positive performance based upon an indicator, if it has history that you're going to lose money in the past, then you're going to lose money in the future. And how about the euro dollar in regards to Forex? You're looking at 100 contracts, and look here, they're both negative. Again, it doesn't make any difference whether or not you're looking at Forex, stocks, or commodities. The RSI indicator does not make money. We test every indicator, every strategy that we use at Traders Country Club, and if we see negative performance, we discard it. We will not use it unless our members are going to make money through the indicators that we use. This is John Sheely with Traders Country Club.